You're watching today's video technical update presented by FX Times. It is Thursday, May 20th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the forex markets. Today I'll follow up on the euro dollar, dollar Japanese yen, pound yen, and Aussie dollar. Euro dollar is rallying from a bottom, but the question remains if this is still a minor correction in a major downtrend or whether this would be a more significant correction. The US dollar Japanese yen pushes lower as the yen is the sole beneficiary of recent risk aversion, also evident in the pound yen. Even commodity currencies are sliding as the Aussie dollar US dollar pair drops precipitously from its topping pattern. This video is being produced at about 2:45 or 3 p.m. Eastern Time ahead of the US session close. The euro dollar is seeing some strong short covering here after bouncing off of 1.2150 area. We have 2 days of rally so far. The day before, this is a reversal combination when you have something like this, like a day reversal. And then now you have a confirmation for a correction, if not, a reversal. At least this would be a correction that should be eyeing this 1.31 area. Okay. As far as if it's a correction from a impulse wave, for example, here one count could be here 1, 2, 3, 4, 5. So this correction should go somewhere, around the fourth wave of your third wave. So this is your third wave, and your fourth of your third should be somewhere around 135. So that's also another target, but before that we have 1.31, which is 61.8% retracement, and this previous low here, and we also saw this rejection as the market tried to go above that. So there's some resistance here at 1.31. But if the 1.31 breaks, then 1.35 could be the next target in a major correction. Okay, so far, we're seeing the beginning of a correction. A minor one would stop right here at 38.2%. But if this is a major correction, it should be more significant in terms of time and price. The price should reach 131 and possibly 135. But as far as timing, we should be seeing this consolidation for next few weeks, or this correction, excuse me. Okay, so this correction, look for it to go to 131 and possibly 135. Here is a 4-hour time frame, and yesterday we saw this divergence. However, I warned you against this divergence because as the RSI made a higher high, your price level wasn't able to make that higher high. So the market at that time, it was not a good timing for a bullish outlook. However, now after this big candle, you have your RSI higher and the price higher too. So there's no negative reversal, and there's no signal, there's no bearish signal anymore, and this completes a possible head and shoulder. A little throwback to confirm would be would be helpful as well, but that doesn't always happen. Here's a 1-hour time frame. As you see, we have a very strong move rally right now. So in the short term, see if this rally will get to the pattern breakout target at around 1.2750. So that's the first target, 1.2750. And you see here, that's the 38.2% retracement area. So that's your first target for a minor correction. If this is going to be a major correction, intermediate correction, it should go to the 131 area. Here's a quick look at the dollar-yen pair as the market has been consolidating, sort of sideways consolidation, slightly upwards tilting, and now we have this double top, made a breakdown, and now the past week we had pretty much this consolidation, and then this week we are dropping again. We are dropping to this level, this rising support, and if the market breaks that support, it can go to the 86 level to test this previous bottom. So look for this to break, and if it does break, wait for a pullback to confirm. I'll come back to this pair tomorrow. Here's a 1 hour look of the pound yen pair. Yesterday we saw this divergence, and I warned that this actually could be a continuation signal instead of a reversal signal. To be more precise, there is a reversal, but that it was very insignificant. Okay, and it tested 50 average. After testing the 50 moving average, came back down. And this, as we have a negative reversal because our RSI here matched this previous RSI, but the price action was lower. So we would use this projection and to 128, and the market has reached 128, bounced up, and there's a correction going on right now. If we look at the 4-hour time frame, we can anticipate this as a 1, 2, 3, 4, and this could be our 5th wave. Now, if there's a correction, ABC correction, or it could be a complex correction. A target for that correction could be in this area. You see, 1, 2, 3, 4. So this area right here, it's a wide range, but that's sort of a guide for the correction to go to around 136 area, all the way to possibly 139. Okay, that's a very rough, very big range for projections, and you need to wait until price action reverses, gives you some waves. Then you could use those waves as proportional measured swings towards your target. But at the moment, that's just a general target for your corrective wave around this area here. Okay. Actually, I wanted to jump back to the pound yen pair, looking at the 15-minute time frame, because we have this, Gartley here, AB, the AB equals CD retracement pattern. So, and also the RSI here is testing 60. It's higher than this level, but the price is lower. So in the short term, there could still be some further bearish action, a bearish attempt such as this, even lower towards the 125.50 area. Okay, we were looking at the 4-hour time frame before for the correction, but we don't actually have a sign that the correction is in place. So for now, still looking at the 15-minute time frame, we still see a possible further decline towards 125.50. Here's a look at the Aussie dollar pair, Aussie dollar US dollar pair, and we have a break of the support, the lower bound of the support. You see here, upper bound, lower bound. So this break is a very strong break. We may not need a pullback, although we may get one because the market is overextended, oversold, that is. So yeah, let's see what a short-term. So right now it's at 150% expanded retracement of this rally. Because it's a channel breakout, we should anticipate 200%. Looking at the weekly, we could see that better. 200% is pretty much the width of the channel projected in the direction of the breakout. So that brings us, somewhere between the 50-61% retracement level. I would be a little conservative and anticipate some support at the 50%. So 0.7850 area where this previous consolidation occurred, I would anticipate support there. So the market looks very heavy at the moment, so I don't anticipate 38.2 necessarily to provide support, although this is testing a 200-week moving average, so there will be some support in the near term, the short term. But if that breaks, look for it to continue sliding to 0.7850. So if the 0.82, let's say 0.82 area breaks, then the market should go to 0.7850. Okay. Looking at the daily, so we looked at the daily. Here's a weekly. RSI broke the 40, so very bearish sign at the moment. but it could still be in the context of this rally. So that's why we will at the moment anticipate support in the short term. And that wraps it up for today. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.